Every 2 weeks, millions of workers have a portion of their paycheck automatically funneled into a 401k or target date retirement fund. This system of passive investing is the default for a global workforce. You buy a small, diversified slice of the entire stock market and assume it will grow without your intervention. But by early 2026, the landscape of the global market consolidated around a single industrial machine. SpaceX, Tesla, xAI, and Neuralink began operating as a unified ecosystem focused on physical artificial intelligence. Building an empire of this physical scale requires trillions of dollars in immediate capital. The primary mechanism for securing that money relies directly on those millions of automated retirement accounts. The traditional rules of public markets and manufacturing are breaking under the pressure of this new industrial complex, and the primary leverage being used to break those rules is your savings. In 2026, SpaceX prepared for its initial public offering with a target valuation of $1.75 trillion. Before a single share even trades on the open market, the company is already larger than 95% of the current constituents of the S&P 500. Normally, major indices like the S&P 500 require a company to be public for at least 12 months. This waiting period allows for true price discovery, protecting everyday retirement funds from the extreme volatility often seen in new listings. However, SpaceX and its backers successfully lobbied for a fast entry procedure. This rule change allows massive companies to bypass the 12-month wait and join the index in as little as 15 days after listing. This logic establishes a mandatory flow of capital. Index funds are contractually obligated to hold shares of companies in exact proportion to their market size. Because SpaceX enters the index at a trillion-dollar scale, the algorithms managing your 401k are legally forced to automatically buy hundreds of billions of dollars of its stock. As retirement money floods into the stock, it creates a liquidity ballast. This stable floor of automated buying allows early private investors and venture capitalists to safely cash out their shares without crashing the market. Passive investing was designed to limit risk through diversification. Under these new rules, it has been transformed into a highly concentrated bet on a single man's orbital ambitions. This financial maneuvering exists to solve a physical problem. The entire AI industry is currently bottlenecked by a global shortage of compute, the hardware power required to train and run AI models. Currently, that power is controlled by a few gatekeepers, primarily NVIDIA and TSMC. In March 2026, Tesla announced the Terafab to break that control. This is a $20 to $30 billion facility planned for the Giga Texas campus, designed to produce a staggering 200 billion AI chips every year. Traditional chip makers take years to build hyper-sterile clean rooms. Tesla's approach uses localized, sealed wafer enclosures sitting directly on a raw industrial floor, aiming to compress the construction timeline down to a few months. Building 200 billion chips domestically removes the ecosystem's reliance on foreign supply chains. If a conflict chokes off trade routes in Taiwan, the Musk ecosystem retains its ability to manufacture its own hardware and continue its AI scaling. The Terafab functions as a declaration of physical hardware sovereignty, rendering the global supply chain chokeholds that destroy competitors irrelevant to this ecosystem. This industrial logic also triggered a massive strategic pivot. In 2026, SpaceX prioritized the construction of a self-growing moon city over the immediate colonization of Mars. This decision is driven by a management philosophy called the science of scaling. This principle dictates that setting a seemingly impossible deadline forces an engineering team to ruthlessly eliminate any inefficient processes just to survive. The physics of the solar system dictates this pivot. Because of planetary orbits, the launch window from Earth to Mars only opens once every 26 months. The launch window to the Moon opens every 10 days. A 10-day cycle enables a continuous loop of testing. SpaceX can launch constantly, testing heat shields in Earth's atmosphere and collecting data from real-world crashes, iterating on ship designs weekly rather than waiting 2 years between attempts. This focus also satisfies the mandates of the massive NASA Artemis contracts, securing the federal funding necessary to maintain SpaceX's dominance as the primary contractor for deep space exploration. By applying the science of scaling, the closest target becomes the most efficient testing ground. A detour to the Moon is the fastest way to build the deep space technology required to eventually reach Mars. On Earth, those same scaling principles are being applied to the workforce. With the mass production of Optimus humanoid robots and the deployment of autonomous cybercabs, the objective is to remove human labor friction from the industrial loop. This leads directly to Musk's core thesis regarding superintelligence. When artificial intelligence surpasses human capability, it will stop recognizing fiat currency, the paper money and digital dollars issued by human governments. In an economy run by AI, value will be measured in two metrics: wattage, or raw power generation, and tonnage, the physical materials maintaining infrastructure. While the public pictures billionaires as people who hoard vaults of cash, massive wealth is actually the byproduct of owning the physical infrastructure that keeps civilization running. By extracting $1.75 trillion of passive capital, building a sovereign chip monopoly in the terafab, and establishing a 10-day lunar launch cadence, this ecosystem is rapidly accumulating that infrastructure. As the world transitions to a physics-based economy run by superintelligence, the fiat numbers currently sitting in your retirement account eventually lose all utility. They represent a legacy system that is being engineered out of existence.